the easy money making has gone. So that is where I would say it's important to build a portfolio.
This calendar year 24, what would be your return by your fund?
It falls less in a declining market, it rises more in a rising market, has much less the volatility, and also over a long period of time, it is able to outperform the benchmark. So, following a multi cap approach in your portfolio construct is another second ingredient of building an all season portfolio.
But this is a real practical discussion we are having. तो अगर आपके जान पहचान में कोई है जो फंड मैनेजर बनना चाहता है, that kind of an aspiration, तो ये वीडियो शेयर कीजिएगा उसके साथ. Welcome to another face-to-face, friend. This time we are talking about investing. We are going back to the drawing board and understanding the nitty-gritties of how to invest, how to build an all-weather portfolio, which is very relevant at this stage because market is digadagi and looks like there is some pain left. So how do you still continue to remain invested for this big opportunity called India? And we have this amazing fund manager from Mumbai doing incredible work. His name is Anirudh Sarkar. Hello, welcome back.
Yeah, thank you, Vivek.
Yeah. So we got to know about you yesterday. It was fun to know about you. Very few Bengalis are into market. Somehow that DNA is not there. But I'm always in state of awe when I see someone living the traditional path and moving and doing something in the stock market domain. So good to see you. I want to start with this question. Is there a panic in market right now? What do you think is going to happen in coming few months, quarters, years? And then we get into that core discussion of today, which is how to build a all-weather portfolio, which will help us go through this probably a panic or a tough time, which we are seeing right now.
No, I would say that I don't see a panic in the market. To be honest, I would say domestic investors are not panicking. But the way the FIs are behaving, it seems those guys are panicking.
Oh, even HNIs are not panicking?
No, HNI is also not panicking. I would say they are a bit, I would say after seeing an excellent year, wherein they have had say 30, 40, 50% kind of a return. Now, last couple of months when they are seeing the returns are not continuing in that trend, that is where they are questioning that, is it a time to take a pause, to take out money, etc. So I won't say it's a panic, but I would say it's more kind of the cautious approach which they are taking. On the other hand, I would say FIs are the ones, and within FIs, I would put it the bucket of the hot money, which is the hedge fund money, which is jumping the geographies. Now, hedge fund money, typically, you would see that, like they say, they are not fixated to one country. Wherever they see better returns, better risk reward, they will jump. So if they take out from India, don't be surprised if within a couple of months they come back to India with a large amount. So the money which we are seeing on the FI side is more about the hedge fund money going out. The long only FI money continues to come in India. And that is basically, I would say, the sovereign wealth funds, endowment funds, passive ETF money, all that money is continuing to come to India. Now, if I just look at an ETF money, broadly around $4 trillion is what is tracking the MSCI emerging market ETF.
Okay.
Now, within that, India has a large 20% allocation now. So this is basically the amount of money which is continuing to flow into India.
Okay. Sorry to interrupt in the middle, and I'll keep on doing this if you don't mind. So I was looking at FPI data for the last 1 quarter, 2 quarter, and apparently looks like they're exiting. But when I include both primary and secondary market, they're actually putting more money in primary market than in secondary market.
No, I think you are bang on that. Because if you look at any of the IPOs, and they're not small IPOs, they're pretty large IPOs. And any IPO, whether you look at the number of the FI participants, it gives you confidence that they're coming with the long-term money.
If you look typically, primary market is the long-term money and secondary market is the hedge fund, right?
Secondary market, I would say many of the FIs who are exiting companies, they are actually doing it partly because they want to participate in the primary. Or they want, that was the hedge fund money.
Okay.
If you look at any of those blocks also, typically last 1 year, we have seen so many of the institutional blocks happening, promoters decreasing the stake and all. Ultimately, some institutions are buying it. And if I look at the breakup of the QIP happening, FIs are one of the big buyers there. So I would say definitely money is coming into India. But yes, secondary market, as I said, hedge fund money is what is exiting. Now, if I come back to your original question that, where do I see the market
Yeah.
in the next 1 quarter or next
Yeah.
2 quarters, next
Yeah,
1 year? I would answer that by saying that if I look at what were the concerns in the last 6 months, or rather last 8 months from April to now, what were the concerns? We had one concern was about elections in India. That is behind us, and now we are all set for the next 4 to 5 years. Then there was concern about elections in Haryana and Maharashtra. That is also behind us. Then there was concern about what happens in the US elections. I think that also is now behind us, and we have Mr. Trump coming back in the month of Jan. Then there was concern that will the rate hikes happen? But yes, the Fed has given its mandate that the rate cuts have begun. Pace of that is always a debate, but yes, the rate cuts have begun. RBI also could be cutting rates in the next 1 quarter. What else was the concern? You had concerns around Ukraine, Russia, Israel, Palestine. I think now with Mr. Trump coming, even that seems that definitely Ukraine war will come to an end. So now if I look at all the headwinds, these are all gone. Now only concern left is the earnings.
That was
Yes.
actually a concern.
Yeah.
Because market was becoming expensive
Absolutely.
vis-a-vis the earning. And the
Yeah.
moment the earning downgrade came, it was a double whammy.
So now I would say market is now worried only about one factor, which actually should be the main factor, which is earnings. Ultimately, all these external events which I mentioned, you, me, or anybody has no control on them. Fed, what he will do, whether war will continue in Ukraine or no, who will win in the elections, we don't have any control. Where we have control is to analyze the companies where earnings are there, avoid companies where earnings growth is not there. So I would say what happened most recently is the market got worried about the weak second quarter. It was expected to some extent, but not to the extent to which the negative surprise happened.
True.
Now, I would again put it in that way that typically if I go back in history and see in an election year, when you have the general elections, 2 months prior to the elections and 2 months after the elections is typically a period wherein most of the infra projects are very slow.
Correct.
Because of the code of conduct, approvals don't happen,
Right.
and a lot of things
Right.
go on the back foot.
Right.
Now, we were actually in the midst of this whole election period from April, May, June, July, August. So this was the 4-5 period of the 4-5 months of the lull for the elections. Now, this coincides with your first quarter and the second quarter. Whatever negativity with the numbers which is there is purely because of this. We track more than 250 companies, and I would say 90% of them are bullish that the second half of this year will be very good.
Achha.
Third quarter will definitely be good because of the festive season, wedding season. Fourth quarter will also be good. Now, if investors just think from a very kind of the logical point, after 4 months, when we begin the FY26, first quarter of FY26 will be extremely good compared to the first quarter of this year.
Because of
Base
the
effect.
base effect. No election impact.
No elections, base effect will come into picture, and whatever projects were on the back burner, they are also getting implemented now. Second quarter of next year, second quarter FY26 will be excellent compared to second quarter of this year because you can't get worse than this.
Correct.
Which means that market will start factoring in the first and the second quarter of FY26 in a couple of months. The question comes that this is the time for investors to start spending time and seeing which are the sectors and companies jahan pe growth is going to come, which are the sectors and companies where valuation is commensurate with the earnings growth. Because that is where the whole debate about valuation should be. Because investors get too much fancy about PE. I keep telling them that look at the PEG ratio. Growth should justify the multiple. If growth is not there, but stock is cheap, even a 20 PE is expensive. If growth is there, stock is quoting at 100 PE, then I would say it's not expensive. So PEG ratio is what one should be looking at, where your valuations are commensurate with the earnings growth.
Okay. So when you look at the PEG ratio, is it the historical PE, the trailing PE, and the trailing growth?
The forward.
Forward. So that means coming 1 year.
Exactly.
Forward PE and 1 year expected growth.
Earnings growth.
Right? Because 1 year
Absolutely.
forward is the earning growth, right? And earning means what? EBITDA or PAT?
EPS. PAT,
EPS.
PAT, yeah,
EPS. Okay. PAT. Okay. ठीक है. How do you know earning 1 year forward क्या होता है?
See, that is where, our work comes in because, we as analysts, as portfolio managers, we interact with companies. We do the 1 year, 2 year. In fact, we go all the way till 36 months. For Excel projection, you can go up to 5 years, 10 years, but that is not what we want to get into. Idea is that the next 1 year, 2 year, 3 years, where the company can grow. That comes with the continuous engagement with companies.
Ultimately, you are then relying on the projections of the management.
I would say that yes, to some extent, you have to depend on what they are saying. But partly, I would say is that it's not just about one company's management.
Oh,
It's
yeah.
like suppose I'm interacting with 5 companies in an industry.
Yeah.
If one is saying 10% and one is saying 50% growth, then definitely there is a big gap. Then you would want to figure out that is that 10% underestimating or is that 50% overestimating. If the broadly, I would say growth projections are between say 15 to 18 to 20, then you know that somebody will be doing better, somebody will be doing less. So whenever there's a huge divergence of the returns of the expected growth, that is where you would want to get more deeper into it. That what is the company doing that he's going to grow at 2 times to 4 times of the rest.
For that, you need to track all the major companies of each sector.
I
For
would
that,
say
you need a
that
very large team.
yes, I would say that typically that is where we say that for an individual investor it becomes difficult because he has a limited bandwidth, and typically individual investors will always be kind of having their own work. So that is where I would say professionally run teams having a 5-6 member team who is able to cover at least 150 to 200 companies. That is where you get a broader picture of different sectors, different companies, and you build a broader picture that which are the sectors, which are the companies which are going to do well.
Got it. So, even though you have your number of team members, eventually you will restrict yourself to those 150, 200 stocks whose business you are able to understand properly.
Absolutely.
That whole circle of competence which Mr. Buffett has taught all of us.
Absolutely. I think one thing which I've been very clear with my team is that any business which is difficult to understand, just avoid that company. Because difficult businesses will always have accidents along the way. Because the easier the business is to understand, if you look at Mr. Buffett, he has made his biggest money in simple businesses. The more complicated the business is, the more moving parts there are. You will not know what will impact which moving part, and that is where accidents also happen. So simple businesses, in fact, I can say happily that most of my best winners in my portfolio have been there just by looking at things around us.
Just a one example.
I'll give an example. Just after COVID, when things opened up, and we all were happy traveling and all. I was on a holiday with my family in the Taj Exotica in Goa.
Acha.
And we were staying in one of the premium rooms, and obviously after being there in the house for 1 year and not going outside, it was kind of very happy change. After spending a couple of days, when we wanted to extend the number of nights, I went to the reception and I asked that can we extend by a couple of nights, and the lady said that I'm extremely sorry, but we are all packed for the next couple of months. Couple of months, and they were all premium rooms. And I was like, I was telling my team, I called up the next day my team and said, boss, we need to analyze Indian hotels. People are willing to pay such exorbitant prices and the rooms are packed for the next 60 days. So these are things, and that was the time I would remember Indian hotels used to be at 120, around 100 to 120.
Amazing, yeah.
Stock has gone up from 100, 120 to 800 plus, 850 plus. So it's not that you can't get ideas around you. Something like something like a company like the Tata Trent. If you see how they have been growing their businesses, the Zodio, it was all about seeing what was happening around you. The number of stores which were coming up, every city I used to travel for meetings, I used to see there used to be the Zodio store in that town. Last time I came, it was not there. You go after a couple of months, you find the store there. Then you understand that definitely they are growing. So I would say the best ideas always come from seeing what is happening around you. And I would say that then you get deeper into it to understand that, does it make sense like an investment case?
Awesome. So keep your senses open. That's the mantra of sensible investing. So let's get into the more core discussions about how to build an all-weather portfolio. देखिए इन्वेस्टिंग के बारे में बहुत वीडियोस है, बहुत लिटरेचर्स है, एंड मिस्टर वॉरेन बफेट आई गेस इज द मोस्ट रेड इंडिविजुअल इन द एंटायर यूनिवर्स. तो बट ऑल दोज आर मोर कॉन्सेप्चुअल वीडियोस जहाँ पे ये स्टॉक में ये होना चाहिए तब आप ये इन्वेस्ट कर लो. बट बिल्डिंग अ पोर्टफोलियो एज एन इंडिविजुअल is something which is always a mystery.
Absolutely.
And I think all the fund managers enjoy that extra respect because you guys know the code of that secret box. तो आज आप मेरे लिए वो बॉक्स कोड खोलिए कि क्या, how do you guys manage portfolio and why we cannot do what you are doing, or let me put it the other way. Even I want to do what you are doing. So tell me, क्या code है? बताओ उस box का.
See, I would say that there is no kind of the mystery box, but it is about following 4-5 simple principles. What will make it all season, all weather, the resilient portfolio. Now that 4-5 things you can address if you understand that what is the definition of a all weather portfolio. Now typically an all season, all weather portfolio will be something wherein it falls less in a declining market.
Okay.
It rises more in a rising market.
Okay.
It's a very ideal kind of a thing, but yes, it's something which you can achieve. And it is able to outperform the benchmark over a long period of time consistently. And the last factor is it should have very less ups and downs. Basically, it falls less, it rises more, and it is able to outperform the benchmark over a long period of time. During periods when the markets are super exorbitant, you will find some fund which is all exposed to small and mid cap giving you 100% kind of a return. Your fund which is more balanced might give you underperformance compared to that fund.
Correct.
You might still beat the benchmark, but you might underperform some other fund.
Absolutely.
That is the time you should not lose focus from your this basic principles.
Okay.
Because that is the time typically I've seen investors, they start moving towards all small cap, micro caps. They dump the basic principles, and then at the peak of the market they are sitting with only micro caps in their portfolio, and when the decline happens, that is where the thing it pains. So I would say that these are the 4-5 ingredients of what is a all season portfolio, which is, again, to put in one summary, it falls less in a declining market, it rises more in a rising market, has much less the volatility, and also over a long period of time it is able to outperform the benchmark.
This is like जब भगवान कृष्ण से पांडवी से पूछा था कि तुमको कैसा वर चाहिए, तो उसने बोला मुझे ये भी दे दो, मुझे ये भी दे दो. तो उन्होंने कहा भी एक में तो नहीं होगा, 5 देने पड़ेंगे.
बिल्कुल.
तो आप लेकिन एक ही में सब कुछ ला देंगे. Let's see whether it's humanly possible. Because this is like ideal.
Absolutely. As I mentioned, I would say it's kind of an ideal that's situation, but it's not impossible to do.
Okay, and you think you have been able to build this?
See, thankfully, as I said, over the last 10 years, 8 years, the portfolio has outperformed the benchmark. Last 10 years, everything you can think under the sun has happened.
Yeah.
You have had 2 elections in India. You have had 2 elections in the US. You had pandemic. You had ILFS crisis. You had Demon. You had GST. You had Israel-Ukraine war, everything. Only thing which has not happened is I would say a third world war. Except that जो सोच सकते हैं, everything has happened. Now, over this period, if you have been able to beat the benchmark 8 years out of 10 years, I think definitely the proof is in the pudding.
सही है. If I may ask you, last year, say not FI, but this calendar year 24, what would be your return by your fund?
So, as of end of November, the 1-year return for my fund, the benchmark return was around 28.
28%.
And my fund return was around 56.
56. So 56 will be that outlier return, because if you look at the other fund performances,
there's a huge gap.
Yeah, 55, 60 is the range. I mean, for example, funds like quant funds and etc. They 35-40% range mein. So you have still reached that zone of exception outperformance. Yet you are an all-weather portfolio.
Absolutely.
तो ये दोनों तो अब आपने जो इसके पहले बोली थी बात और अभी जो बात बोली उसमें थोड़ा कॉन्ट्रडिक्शन नहीं हो गया? आपने कहा कि बहुत ज़्यादा रिटर्न नहीं आएगा बुल मार्केट के अंदर में, बट गिरेगा नहीं आपका जब बेयर मार्केट आएगा तो. बट यहाँ तो आपने बुल मार्केट में बहुत ज़्यादा रिटर्न बना लिया.
So इसमें I'll mention this that इसमें if I see this component of the return, one big contribution has been that I fell less in a weak market.
Okay.
Just to give an example, in the month of October, market's benchmark was down around 6%. My portfolio was down just half of that.
Oh.
Month of November, benchmark was flat. Portfolio was in the positive.
Is that because you're more invested in large cap? That's why?
I have around 42% large cap, around 42% into the small cap.
So your small cap did not fall so much.
Absolutely. In fact, this is what, I'll discuss in my subsequent discussion that don't go by what is the herd mentality. In fact, in April, May, when everybody in the market was talking that sell small caps, buy large caps, I actually decreased my large caps and bought more small caps because people were dumping good small caps at any price. And there was no reason to dump them because if you know the business is in and out, you know that, valuations are good. Just because, people are concerned about the broader market doesn't make sense to dump them. if I see the last 6 months, small cap index has outperformed the large cap index, which shows that that whole discussion around small cap mehenga hai, dump them, move to large caps was completely based on a few companies which were definitely expensive. Now, our job is to filter those expensive and not have those. Get into those jahan pe valuation comfort hai, jahan pe you know that earnings growth is going to be there.
So you should be thankful to all the brokers who released the report कि small cap महंगा हो गया है, निकल जाओ. हाँ?
Absolutely. Like, that is what I would say, ki, the differing market views is what really gives you an opportunity.
सही है.
If everyone has the same view, you will not get opportunity.
सही है. चलिए आगे बढ़ते हैं. So we'll take this presentation as a base for our discussion.
Yeah. So beginning with regard to what makes a portfolio an all-season portfolio, I would say that the first thing so there are 4 or 5 components what would make it an all-season portfolio. First thing is that you should have a well-diversified portfolio.
Okay.
Now, when I say diversified, it is about the number of stocks which you own. Because I keep getting this question a lot from investors that, मेरे को concentrate portfolio चाहिए. Now, if you ask them that why do you need a concentrate portfolio, they have this notion around it that they will make more returns. Now, they don't understand the risk part of it. Now, concentrate portfolio doesn't mean that, if you buy 5 stocks, 10 stocks, you'll make more returns. You're taking more risk also. Because in the market, there are 2 types of risk. Systematic risk and unsystematic risk. Unsystematic risk is the company-specific risk. Systematic risk is the market risk. Now, the moment you have a 10-stock portfolio or 5-stock portfolio, your company-specific risk goes up a lot. Because if something goes wrong in 1 or 2 companies, your portfolio returns can go haywire completely. जो systematic risk होता है, जो market risk होता है, that is something you can't avoid. But the unsystematic risk, जो company specific risk है, that is what, if you go by the research and see, ideal number of stocks which you should have is between 20 to 30 stocks. Now, that takes care of both concentration and diversification. Out of if I look at my own portfolio, around 25 to 27 stocks is what I have.
Okay.
Out of that, the top 10 stocks makes up 50% of the portfolio.
Okay.
Top 4 stocks make 25% of the portfolio.
Okay.
Top 20 makes up 85% of the portfolio, which means that where conviction is high, I have allocated more. Where conviction is a bit low, I have just made an entry. So I'm gradually building it up.
Okay.
So it's not like an equal weight portfolio, but conviction high, have more exposure. Conviction is low, have medium. And obviously, if you don't have conviction, you should not have it at all.
And have you objectified this word conviction?
Yes, see, conviction is about all your parameters of evaluation should go in sync. Like, your earnings growth, valuation, management, background check, business model, everything should be meeting. That is where your conviction builds up gradually.
Okay.
Because see, typically conviction कैसा आता है कि you would have analyzed and evaluated a company. You would not want to put in all your money on that on the first day itself. You begin with a small entry. As you see the management is continuing to deliver what they are promising, that is where you start building up more.
Got it.
Because if I look at any of my positions in my portfolio, which is at a 7-8% today, I didn't start with a 7-8% on the day one. Began with a 2%. As I saw more development in the business, I added another %. Gradually, you build it up. You can say that yes, initially अगर पूरा डाल देते तो you would have got a better entry point, but the risk is also there. What if something went wrong? Your exit will also become easier. So diversification of portfolio is the first, I would say, factor, which is where you make an all-season portfolio, which is have between 20 to 30 stocks. Your highest conviction, top 10 ideas make up say 50-60% of the portfolio, and then you gradually have the lower tail.
Okay. I have a question here.
Sure.
Just say, when you talk about fund management or investing, हमेशा कुछ, there are some statements which are very open-ended. Like, for example, add more position, build a conviction. These are very individual oriented. That you know what you want to do, which is from within you will get a enlightenment की अब मुझे ये stock ले लेना चाहिए. Correct? And that's why all these businesses are very fund manager dependent businesses.
Absolutely.
Right? Have you created a process around it which is 100% objectified that if a stock is say this is the score I'm giving, and if something happens, the score reduces, automatically my quantity goes up or quantity goes down. Is there a method to the madness which has been penned down, or it is still discretionary dependent on fund managers?
See, I would say कि investing, I'm sure you will also agree, is a blend of art and science.
Yeah.
थोड़ा वो अंदर का जो feeling होता है ना, that is the beginning point.
Okay.
And in fact, there are books written on it that the first feeling which you get about a business is always the right feeling.
Yep.
So the moment you meet a management or you evaluate a business, if you get a positive feeling from the beginning, then is where I would start building on it more. Sometimes it happens, yes, that the numbers don't support the feeling. That is where you don't jump with your feelings getting a higher weighted. That's why I said it's a blend of art and science. That art part is the feeling, and the science is the numbers.
So first art will come and then science.
Absolutely.
Right, because trading में उल्टा है.
Absolutely.
Science पहले आता है.
बिल्कुल.
We believe that trading is all about data science.
In the trading तो जब आप आर्ट तक पहुंचेंगे तब तक वो प्राइस टारगेट भी अचीव हो जाएगा.
Correct. So this is good classification. I think we have arrived at investing में art पहले फिर science, trading में science पहले फिर art.
Absolutely.
How much percentage will be art investing में?
See, I would say that definitely it's the beginning point. And in the beginning point, I would say it would be more than 60-70%, wherein you get a positive vibe that this industry is going to do well.
Okay.
And that is where I would say that investors keep asking me that how do you decide which sector will do well? I would say that all of us are in the same market. There is no information arbitrage. There is only interpretation arbitrage. That who makes what sense of what data.
Wow.
So interpretation arbitrage is what makes the market. That किसको क्या लग रहा है about industry, will it do well or will it not do well? See, the example I gave you about Indian Hotel, when I bought it at 120, someone exited at 120,
Someone
right?
exited also, correct.
So he was not positive about it.
Yeah.
Because he would have thought that, the COVID has just happened, maybe it will again the relapse and, let's get out of hotels.
Yeah.
So I would say initial part mein art becomes the dominant part, but as you get to know the business more and more, art takes a back seat and dominant part becomes the numbers.
Lovely.
Because I should not fall in love with a stock. वो बहुत important है. Don't fall in love with your stocks. Also know when to exit.
और वो खाली अगर आर्ट रह जाएगा
Then तो you will fall in love with it.
हाँ, चाहे मैं कुछ भी पेंटिंग करूंगा मुझे तो वो अच्छी लगेगी हर समय. हाँ, थोड़ा तो साइंस डालना ही पड़ेगा. What a beautiful, I love that phase which you said, from information arbitrage to interpretation arbitrage. बहुत जबरदस्त. I'm going to use this. I'm going to quote you. You said. ठीक है, आगे बढ़ते हैं. Lovely.
Yeah. So after the diversification part, then comes the second part, which is purely I follow a multi-cap approach.
अच्छा.
Now, multi-cap approach is like you need to be flexible between the market caps which you are holding. There are times when the large cap does well. There are times when the mid and small cap does well. So if I'm following a multi-cap approach, you're actually flexible between the market caps and you're seeing that, where you want to be biased at which part of the market.
Sure.
Typically, a large cap would give you the comfort during the difficult market times when the markets are weak, markets are bearish. That's a time a large cap bias will give you comfort. During the bull runs, during an economic expansion, during the bullish part, that is where the mid and small cap will give you a kind of the higher return.
Sure.
So following a multi-cap approach in your portfolio construct is another second ingredient of building an all-season portfolio. If I go back in history and see in my own portfolio in the last 10 years, there have been times when 70% of my portfolio was into large caps.
अच्छा.
And there have been times when 60-65% of my portfolio is into the mid and small cap.
Again, have you objectified that?
Usme, I would say it is about looking at the macro picture.
Acha.
I'll give an example. In June 21, I had around 30% large cap, around 42% into the small cap, and around, I would say, 10-15% into the mid cap. So I was biased towards the mid and small, roughly around 60-65% was into the mid and small. I'm talking about June 21. Between June 21 and December 21, if you remember, there was a sharp run up in the small caps. Valuations had gone over the roof. I decreased my small caps from 42 to 26%. And my large caps went up from 30 to 48%.
That was basically because of the valuation. Okay.
Because valuation महंगा हो रहा था, जो मेरे को comfort नहीं आ रहा था, stocks were going much higher.
Okay.
So between June 21 to December 21, I decreased my small caps from 42 to around 26%.
Okay.
In the next 6 months, my small caps went down from 26 to 8-9%.
Oh.
Because in Feb, March 22, the Ukraine war started. Now, abhi dekh ke lagta hai ki Ukraine war has always been there. But if you remember then, it seemed that we have entered into a full-blown war.
Absolutely.
So, macro environment was very difficult. Demand was weakening. Interest rates were rising. Inflation was at 40-year high. Energy prices had gone over the roof. raw material prices, because of shipping cost going up multifold, they were over the roof. Companies' ke margins were getting hit. So during that period, I actively decreased my small caps from 26 to 8-9%. My large caps went up from 48 to 68-70%.
Okay.
For whole of calendar year 2022, I maintained around 70% into large cap. January of last year, when I saw that valuations of many of the small caps, after spending 1 year of time correction and price correction, they had also had decent earnings growth. Jan 23 is where I started doing the reverse. I started decreasing my large caps and started increasing the small caps. So between December 22 and June 23, my small caps went up from 8-9% to around 26%.
Okay.
By December of last year, which was December 23, ek saal pehle, my small caps went up to around 37%. So it was all about, this journey of looking at the macro picture and then taking a call. Now the thing happens that yes, it's not that companies drastically change, but yes, during the difficult period, you want to move your portfolio into some part of the safety so that once you get the better visibility of what is happening around, you get into it again. So I would say multi-cap approach is what is advisable, and that is what kind of helps you to be there in the right market cap at the right time.
सही है. तो इसका मतलब you are not in cash.
Cash calls, I would say I take, but that is a more tactical cash call. कोई भी cash call, if anybody wants to take an aggressive cash call, you can't stay in cash for a long period of time. I've seen people making those blunders. They stay with 15, 20, 30% cash for a long time. The returns get hit big time. It will take you a long time to recover from that underperformance. So cash call, I have taken going up to 15-20% cash, but it's more tactical.
Okay.
Within a month, deploy it back.
Okay.
Typically, I would take a cash call around events.
Okay.
Like if I give you an example, the most recent elections, around 10% mera cash tha. Exit poll aaya, market was excited. I didn't deploy that day. Waited for the real numbers. The numbers came. We saw the market tanked. That day I deployed some. Within the next 1 week, that 10% was deployed completely. So you can't be sitting with a 10-20% cash for a long time, because then you will have to have a very long period of underperformance and you will have a tough time to catch up.
सही है. Friends, we are having master class on fund management. This is actually so much insight. हम लोग कॉलेजेस में जाते हैं, कैंपस में बुक्स पढ़ते हैं पोर्टफोलियो मैनेजमेंट पे, बट दिस इज अ रियल प्रैक्टिकल डिस्कशन वी आर हैविंग. तो अगर आपके जान पहचान में कोई है जो फंड मैनेजर बनना चाहता है, दैट काइंड ऑफ एन एस्पिरेशन, तो ये वीडियो शेयर कीजिएगा उसके साथ. इट्स लॉट ऑफ लर्निंग वी आर गेटिंग.
I'm happy, if your investors, they take something from this discussion, I'll be more than happy. I think our job is done then.
Yeah, that's true. चलिए.
So these are the two parts of, the first two parts of making an all-season portfolio. One was diversification, second was multi-cap. The third is very important, which is about balancing both value and the growth style.
Yeah.
Because अगर आप देखोगे in the market, there are one set of investors and managers who go by being a value investor. Now, typically a value investor will not touch expensive stocks. On the other hand, you have different set of managers who are the growth investors. They will not touch, your PSUs, defense, power, energy. I would say in India, you have a very unique market because यहाँ पे both value and growth does well. Now, before I come to that, what defines a value sector or value companies? Typically, value stocks are the ones जहाँ पे your price to earnings is low, price to book is low, dividend yield is typically high. And I would say these are typically those old economy boring sectors. Your, infra, engineering, capital goods, power, defense, oil and gas, consumer staples. All these makes up your boring old economy sectors, and those are the value sectors. On the other hand, you will find the growth sectors. Growth sectors are typically the more hot sectors. They give you the more excitement because they would be typically the new age companies. They will be, I would say, the consumer discretionary companies, which have always been a hot favorite for many investors. The retail focused NBFCs, private banks, healthcare, these all come into the growth. The growth sectors or growth companies are typically the ones where the price to earnings will be very high, price to book will be high, dividend yield will be very low. Some of them might not even make profit. And that is where the growth of earnings and top line and bottom line is also very high. Now, if I see India compared to the rest of the world, last 5 years, last 10 years, internationally, the growth part of market has done well. Now, if I see in the US market, you're the Magnificent Seven, your Tesla, Apple, Alphabet, Facebook,
Amazon.
Nvidia, Amazon. These all have been the major drivers of the US market. In fact, US market, if you remove these 7 stocks, I think they would have done exceptionally bad in the last 5 years to 10 years. So growth has been the major driver for the global markets. Unlike that, if you see in India, in the last 5 years, both value and growth have done well. Because India is an emerging market, all the sectors are seeing a kind of a all-round growth which is happening. So whether you talk about your PSUs, you talk about your energy, power, defense, they have all done well. On the other hand, your consumer-facing companies like Tata Trends, Zomato's, all these companies have also done well. So if you had been fixated कि मेरे को सिर्फ value investor बनना है, I don't want to touch the expensive stocks, you would have missed out on the high growth companies. On the other hand, if you would have said कि नहीं मेरे को सिर्फ growth investor बनना है, जहाँ पे growth है, only I will buy those, then you would have missed out the big rally which was there in the PSUs, defense, power, etc. So I would say what has helped me in the last 10 years is balancing value and growth in the portfolio. Look for the mispriced opportunity in both parts of the market. Because there is mispriced opportunity in both value and growth. And idea is to find where market is not pricing in the right earnings growth.
Interesting. ऐसा कोई स्टॉक हो सकता है जिसमें वैल्यू भी है ग्रोथ भी है?
See, typically आज के दिन में तो बहुत मुश्किल है. Because I think now आज के दिन में if I see मेरा portfolio, biasness is more towards growth. Because very difficult to find deep value. Now it has become more kind of I would say a relative value. Compared to something else, what looks better.
Okay.
Deep value is not there.
Right.
And as I mentioned in my earlier comment, is that when I'm looking at valuation, very important that look at the growth in earnings, which is the PEG ratio. Simple example, like, I keep hearing sometimes, some investors they tell me, this stock is at 15-20p. This looks very cheap. I should buy it. If you look at the earnings growth, they're not even growing at 10%. On the other hand, there could be a company at 30-40p, but earnings is growing at 25 to 30%. That means its PEG ratio is less than that earlier company. So PEG ratio becomes very important. That is that company justifying the growth, earnings justifying the growth.
सही है. But earnings के अंदर में कुछ exceptions item भी कभी-कभी
होते हैं. वो तो adjust करना पड़ेगा. Yeah, you have to always
हाँ.
adjust the exceptional items. You have to take in the core earnings growth.
बरोबर है.
So this is the third part, which is balancing the value and the growth.
एक क्वेश्चन मेरा इसमें और रह गया, सॉरी. तो जैसे अभी अर्निंग स्लो डाउन, अगर अर्निंग स्लो डाउन का फेज चालू हो गया इंडिया में, तो फिर मुझे वैल्यू की तरफ ज़्यादा जाना चाहिए?
Yes, so typically if I see during period जहाँ पे economic weakness रहता है, economic recession और softness in the economic growth, that is the time जहाँ पे आपको value stocks में आपको दिखेगा कि gradually you should build your portfolio there, because when the boom picks up, that is where they will outperform.
नहीं, वैल्यू स्टॉक्स बूम में आउटपरफॉर्म करेगा, ग्रोथ करेगा?
नहीं, I'm saying when the value stocks you have to gradually enter when the weakness is there.
Weakness is there.
Not before the weakness.
हाँ.
Because वो उस टाइम पे, see, typically if I go back and see, prior to 2020 when the weakness was there, all your value stocks were at deep valuation.
Correct.
Anyone who has bought during 2020 beginning or mid of 2020, even end of 2020,
Correct.
2021, 2022 has seen a good run up.
क्लासिक कोल इंडिया, क्लासिक
Exactly.
केस है. हाई डिविडेंड यील्ड 2020 तक कोई इज्जत नहीं देता था.
Absolutely.
सडनली डार्लिंग बन गया वो सब.
So if you see the last 3 साल, which has been the good run up, growth stocks have underperformed.
Yeah.
So you have to build up your portfolio before that cycle begins.
Oh.
So you have to build up your portfolio before the cycle begins, but you could be early also by a couple of months or a quarter, but that is where the patience get tested as an investor.
And the skill of the fund manager.
See, typically right now, I would say, as I said, I'm more biased towards the growth.
अच्छा.
Because abhi, not because, I'm buying expensive stocks, just because these companies which I own, there the earnings growth is also high. So valuations are high, but earnings growth are also high. So that is where the biasness is towards the growth stocks.
हो सकता है उस कंपनी में या उस सेक्टर में अर्निंग ग्रोथ हाई हो, बट मार्केट ओवरऑल अगर नहीं ग्रो कर रहा है,
Absolutely.
यू विल बी कंफर्टेबल विद दोस ग्रोथ स्टॉक्स?
Absolutely. Because जहाँ पे, if I'll give you an example, जो मेरा current portfolio है, over FY26, the portfolio earnings growth is roughly expected around 21 to 22%.
अच्छा, पोर्टफोलियो लेवल पे निकालते हैं उसको.
Yes, portfolio earnings growth निकालना पड़ता है कि what is my portfolio earnings growth. Portfolio earnings growth is around 21 to 22%. Benchmark earnings growth expected है roughly around 11 to 12%, which means you have a portfolio which is almost growing at double the index earnings. So valuation could be higher, but earnings are much higher. So PEG ratio अगर मैं portfolio का देखूँ is around 1.33, 1.33 के आसपास है. PEG ratio of index is around 1.7. Which means your portfolio PEG is lower than the index का PEG.
Which is an ideal situation.
Yeah, that is what you would want.
जितना लोगों का PEG उतना अच्छा है.
That means margin of safety is there. इसीलिए keeping the PEG ratio lower than the index also takes into account that your beta of the portfolio will be low. मेरा portfolio beta is around 0.85.
अच्छा.
Which means again that you will fall less in a declining market.
मुझे एक बात बताइए, ये सब जो पैरामीटर आप बोल रहे हैं पोर्टफोलियो लेवल पे, तो एक एक करके चलते हैं कि पोर्टफोलियो पेग रेशियो. तो आप क्या करते हैं कि पोर्टफोलियो में जितनी कंपनीज हैं उनका अर्निंग फॉरवर्ड
Multiplied by the weight.
अच्छा, आप उसको नहीं डू योर मेरा किसमें कितना होल्डिंग है उसके आधार पे करते हैं.
So whatever
Do
is
you
the
do
portfolio
weightage?
holdings, like suppose I have 7% of a company A, and the company's earnings growth for the next year expected to be around 20%.
हाँ.
So basically वो वैसे करके weightage add multiply हो जाता है
Oh.
7 into 20. Like this, all the portfolio stocks are done. Then you get basically a weighted sum average.
Oh, that's interesting. That's very interesting.
So that gives you a portfolio earnings growth.
तो जितना भी आप पोर्टफोलियो के पैरामीटर्स निकाल रहे हैं, चाहे पोर्टफोलियो बीटा है वगैरह है, वो आप अपना होल्डिंग का वेटेज के आधार पे
Absolutely. Based on your portfolio, whatever is the holding, you get a weighted average of your portfolio.
That's interesting. ठीक है, आगे बढ़ते हैं.
So once you are done with the value and the growth part, then comes the fourth part, which is the most important part, which is sector rotation. Now I would say कि what I have been following for the last 10 years is sector rotation as a pure business philosophy, which gets translated to your portfolio construction.
Right.
Now sector rotation is nothing but trying to capture the economic cycles. Now economic cycles are an inherent way the market works or the economy works. Good times, bad times, they come and go, and that is where your portfolio should be in the right sectors which are supposed to be in the right phase of the economic cycle. Now if I see within the economic cycles, now in this table you'll find that the ones marked in green are the top 3 performing sectors in that year, and the ones marked in red are the bottom 3 performing sectors in that year. Now what this shows is that there is no sector which has over a long period of time been there in the top 3 or the bottom 3. In fact, interestingly आप देखोगे कि any sector which has been in a bottom 3 this year, the next year it has gone into the top 3. So you will find that pink has intermittent with the green, or the green has intermittent with the pink. So idea is to be flexible with the sectors which you are exposed to. So sector rotation is one of the key parts of alpha creation, and I would say if I look at my own portfolio returns for the last so many years, I would say that sector rotation has been a key contributor, wherein one part is being there in the right sector. More important part is avoid the wrong sectors. मैं आपको एक simple example देता हूँ. For most part of the COVID, index was around 30% banks and financials. I was sitting at around 14-15% banks and financials.
Okay.
Which means I was heavily underweight on the banks and the banking industry.
Yeah.
Now, in spite of being underweight on the banks, when I look at my attribution during that period, a large part of my returns has come from banking. Now that is a very kind of a big irony. That एक तो आप underweight हो banking पे, but आपका return has come more from the banking. How? I was overweight on the PSU banks.
Oh, तो सेक्टर के अंदर में भी आप इंडस्ट्री रोटेशन भी करते हैं?
Absolutely. So it is all about, see, sector selection is the first part. Now within sector selection is what do you buy? That becomes more important. So sector rotation, though I say is important, but that would take up only say 10-20% of your job. 80% of your job is selecting the right companies within the sector. Because see, ultimately I can pick up the best sector but the worst company. फिर लगेगा यार sector तो सही pick किया but you have not made money because you have been in the wrong stock. So that is where I would say sector rotation is the beginning part, and the whole idea about sector rotation is you have to catch the tailwinds. Avoid sectors where the headwinds are there. So if you find sectors, where there are a lot of earnings concern, valuation expensive, or too many events which that will impact its numbers, better to avoid them. Easily, I would say sector rotation is very important. I'll give an example. If I just give an example of the last 5 years of how my sectoral shifts has happened in the portfolio. During 2020, 2021, and the first half of calendar year 22, 4 sectors made up almost 65% of my portfolio.
Okay.
Pharma, chemicals, IT, and FMCG. Now
Okay.
we know that that was a golden time for the Indian chemical stocks. They went up through margin expansion, multiple expansion, import substitution, and that was getting reflected in the prices. Pharma, again, we know that it was a golden time for the Indian the pharma companies. Tech stocks, after almost a gap of 6-7 years, we were seeing the Indian tech companies seeing the largest deal pipeline, margin improvement, because employees were not going overseas. You are saving money on the visa cost, travel cost. So I would say that, and FMCG, we were all at home eating to our heart's content. So all these were the good stocks to good sectors to bet on. So pharma, chemical, IT, and FMCG made up almost 60-65% of my portfolio. Somewhere from the middle of calendar 22, I started decreasing exposure into all of this because valuations had become very rich. When I used to talk to some of the IT guys, IT analysts, they used to justify the price talking about FY26, FY27 numbers. We were sitting in FY22, वो 4 साल बाद 5 साल बाद का numbers से justify करते थे कि valuation है. Now that got me concerned because as I mentioned, we interact with companies. Now when I used to meet the IT companies, they used to sound concerned that attrition has gone up. It has become an employees market. People are coming to me with one job offer asking for a 20% hike. We know about those stories that people working in company A got a job offer from company B, took job offer of B, went to company C, took another hike. Company C का offer letter company A में लाके यहाँ पे 40% hike मांग रहा है. So these were the things which I used to hear from the IT companies. Now market was not factoring in all that. So valuation had become rich. From 60-65% into these 4 sectors, pharma, chemical, IT, and FMCG, by December 22, my exposure went down to almost 18-20%, which means almost 40-45% I booked out of these 4 sectors, which were the hot sectors that time. Now, where did this money go into? I got aggressively into urban consumption.
Acha.
Because urban consumption post-COVID was kind of the revenge buying.
Correct.
People were spending like anything.
Right.
So what is urban consumption? Basically, consumers like you and me, where do we spend money? One part we spend on house. So which is the real estate and ancillary. Second part we spent on buying the car. So auto and auto hank. Third part we spend on eating out, ordering food, going out, going to the malls, etc. That is where consumer discretionary. And fourth is we spend on holidays, which is hotels. So these 4 made up almost 42% of my portfolio. Even as of today, I have around 30-35% into urban consumption. Second part of my allocation went into industrials and capex, which is where the whole manufacturing, make in India, private and public capex, it comes into picture. And that is where almost 30% allocation is there even today. Now within that, it includes your capital goods, engineering, power, defense, cement, infra. So all this makes up your capital goods, your capex and infra. The third part went into your BFSI. Now within BFSI, I have been more bullish on the other financial services like asset management, wealth management, platform business like your Bombay Stock Exchange. So all this is where the allocation went into. So pharma, chemical, IT and FMCG se nikal ke the allocation went into your urban consumption, industrials and BFSI. So this is just a glimpse of the sectoral shifts which I have done, just to give you a picture that investors need to be flexible between the sectors where they are betting on. If you look at the tailwinds, bet high. If you see headwinds, index में चाहे जो भी weightage हो, you don't need to hug the index. If your conviction is low, don't have anything there.
अच्छा, ये tailwind और headwind जो है, ये थोड़ा hindsight नहीं होते हैं. मतलब ये होने के बाद में नहीं लगता कि इसमें तो tailwind ही था. जैसे अभी आज के रेट में हमको, अभी हम दिसंबर 24 में बैठे हैं. So let us pen down 5 sectors or themes जिसमें आपको tailwind नजर आ रहा है.
See, जो आपने बोला कि about tailwind and like typically on the hindsight में लगता है, उसमें मैं बोलूँगा कि indications they start coming. Indications are like maybe could be development of some news, could be improvement in business. So I would say कि उसमें आपको indications आने लगते हैं. Now वो indications कितना दूर तक आपको वो sector का tailwind लेके जाएगा, that will depend on different industries. In some industries, the tailwind can take you very high. in some it will not take you very high. Like जैसे होता है, like tailwind headwind कैसे होता है, typically when you are on the high sea, that is where if you have a very strong wind, it takes you higher deeper into the sea. If the wind is not strong, it will take you to an extent but not very deep. आज के दिन में अगर मैं बोलूँ द सेक्टर्स जहाँ पे टेलविंड्स दिख रहा है, सिंपल एग्जांपल टेक्सटाइल दिख रहा है.
Okay.
Now textile, there is no change in the numbers because whatever has happened in Bangladesh, it has just happened. But it is a indicator that India is trying to capitalize on that. When we are interacting with companies, they are saying that the same customers in the US and Europe whom they were pursuing earlier, now they are coming to them asking for the samples.
Okay.
Can they execute so much order? Can they do and all that? After a long time, Indian textile companies are thinking of doing capex
Okay.
because it's a pure opportunity which can come from a neighbor.
Okay.
Now ये एक ऐसा चीज है कि मतलब this is kind of an indication, but numbers में अभी नहीं दिखेगा. It will start showing in the numbers after a couple of the quarters.
Okay.
So tailwinds, one is there. Second tailwind I'm seeing is in the healthcare space.
Okay.
Pharma. Now during COVID they had a supernormal margin. After that, for 22, 23, there was a big dip in the margins. Now, for the last 8 months, 10 months, I'm seeing margin improvement is picking up. So this is an indication that valuation time correction हुआ था, काफी time correction हुआ था. Valuations had become comfortable, and now the margins are again improving. Growth in earnings is also picking up. Part of it you can say is that all the supply chain जो oversupply था, those have been adjusted. Part of it you can say that in the US, the Biosecure Act, US doesn't want to fund any Chinese companies now.
Right.
That is where Indian companies who have good presence in CDMO, they can really do well. Companies who have good presence in the US market, Europe market, they can do well. Margins are improving. So these are kind of indications that, textile ke baad, pharma is another area where the tailwind is there. The third sector where I see the tailwinds continuing is anything to do with equity markets. Whether it is asset management company or a wealth management company, I would put it wealth management / broking firm. I would say that there, if the equity participation is going to continue to do well, their earnings are bound to do well. So I would say asset management company, wealth management company, platform businesses like BSC, etc. I don't see a reason why, if you have a 3-4 साल का horizon, why this tailwind can't continue. In fact, as I mentioned पहले कि tailwind किसी sector में tailwind बहुत लंबा लेके जाएगा, किसी सेक्टर में हो सकता है कि it might not be so long. Like this whole equity culture, I think India is just beginning. If equity participation in India is going to go up exponentially, I think these sectors will bound to do well. Even in a weak quarter, if you look at asset management companies, 28 से 35% earnings growth आ रहा है. Now, definitely they are outperforming the broader market earnings growth hands down.
Correct.
So these are the sectors जहाँ पे दिख रहा है कि tailwinds है.
आपने तो बहुत इजी कर दिया लाइफ. और सबसे बड़ी मजे की बात है कि ये सेक्टर्स के सामने अपेरेंटली इंडाइसेस नहीं दिखते हैं. ये जो एक्सचेंज के इंडाइसेस है ना, तो क्या होता है, इंफॉर्मेशन का एक प्रॉब्लम है. जब सेम इंफॉर्मेशन सबके पास अवेलेबल होता है ना, तो फिर अपॉर्चुनिटीज़ कम हो जाती है. अब यहाँ पर आपने नाम मेंशन कर दिया, अब थोड़ा अंदर डीप किसी को जाना पड़ेगा इसमें से पैसा बनाने के लिए.
Absolutely. See, अभी textile मैंने बोल दिया, but textile में भी there are companies which are not doing well. Textile में there are companies which are doing well. दूसरा चीज जो होता है कि if the company is doing well, उसमें corporate governance issue है कि नहीं, वो सब भी चेक करना पड़ता है. Like, there could be a good company but not growing. There could be an average company and growing. And there could be a very high growth company but big question on the corporate governance. So those are the filtrations which obviously once you spend time with those companies and the market, you will get into it.
इसीलिए फंड मैनेजर्स हैं भाई. नहीं तो ये इंडस्ट्री का नीड ही नहीं था अगर सब हम कर लेते तो.
So just to put it in kind of, in one shot, like if you want to build an all season, all weather, the resilient portfolio, first thing is diversify your portfolio in the number of stocks. Have around 20 to 30 stocks in the portfolio. Second is follow a multi-cap approach. Be flexible between the large, mid and small. Depending on the risk, reward, valuation, comfort, opportunity, you should be moving between that. The third is have a good balance of the value and the growth style in the portfolio, because ultimately India is a very unique market and यहाँ पे आपको मौका मिलेगा both in the value and in the growth part of the market. And fourth part, which is the most critical, is sector rotation or sector selection. be there in the right sector with a high conviction, with a high weightage. Get away from sectors जहाँ पे tailwinds नहीं है, जहाँ पे headwinds हैं, जहाँ पे concern है. Get away from those sectors. So sector rotation or selecting the right sector approach is the fourth and the most important part. So this broadly, I would say, is the ingredient of making an all-season, all-weather portfolio. The returns can always be high and low, but I would say it will at least give you that peace of mind that good times, bad times, in the long run, you will have a portfolio which will generate alpha.
Superb. With this, we conclude a 60-minute masterclass on all-weather portfolio. Maza hai.
It was a pleasure interacting, and I'll be more than happy to interact with your investors.
That will be amazing because a lot of people will have comments. So, अगर आप थोड़ा समय निकाल पाएं, if you can reply to their comments, we will also share his Twitter handle ताकि आप Twitter पे भी इनको टैग कर सकें. और एक डिस्क्लेमर है, ना मैंने इनको कुछ पैसा दिया, ना इन्होंने मुझे कोई पैसा दिया. There is no commercial transaction between us. So whatever you do with him or you don't do, or whatever you do on your own based on whatever he has said here, ये आप लोग के बीच की बात है. मेरा काम है पढ़ाना और मैं वो कर रहा हूँ. All right. So thank you so much, Anirudh. By the way, just one compliment. Because I have born and brought up in Bengal, I call myself a Bengali also. So Bengal या Bengalis की खास बात होती है कि we are very binary people. 0-1. Because that's why we are very good in maths. ये है तो ये है. ये मैं करूँगा तो करूँगा, ये मैं नहीं करूँगा तो नहीं करूँगा. तुम कितना भी मेरे को बोल दे मैं नहीं करूँगा. So the entire discussion was so objective, and every time I was trying to get it more objectified, you had a good answer.
Right.
So I'm very glad to know you, the process you have in your management.
It's been a pleasure. And as I said, initially, if you only had the binary aspect into the market, I think the humans would not be required. Algos would have done the job. Yes, you can say algos have done a job, decent job in the West. But I would say in a emerging market like India, definitely that aspect is still going to be taking time. But I would say that, looking at the art and science, जो हम लोगों ने बात किया, अभी भी यहाँ पे वो art वाला part is dominant.
Yes. And we all know that Bengalis are artists, isn't it? So thank you so much, दोस्तों, ये वीडियो देखने के लिए. I hope you enjoyed it. I enjoyed thoroughly. Every bit of learning is there. And if you really liked it, you can just comment, yes, I liked it. And you can share this video with your friends and family who really want to aspire to manage their own money or to become a fund manager as well. Thank you. ध्यान रखिएगा. Bye bye. जय हिंद.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.